Okay, the Fed plans to reset the housing market, raising the likelihood of falling home prices. Can you believe it? Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. Hope you are doing well. Today is the 21st of June. Can't believe the month is almost over. Listen, this video is brought to you by our friends at Foreclosure.com. So if you want to check out distressed properties that are in your backyard, your neck of the woods, go to GetHousingData.com. That's GetHousingData.com. That's my affiliate link with those guys. You can check out the cool deals, tax deeds, pre-foreclosure, short sales, foreclosure, REOs, etc. All the distressed property that's going on. Foreclosure.com is the leading provider of distressed property listings in the U.S. Guess what? GetHousingData.com will take you there. Sign up, check it out. All right, guys. Listen, first of all, before we get into that, respect to what the Fed said, there are still this. I guess this really amazes me that there still are segments of the, we'll call it, journalistic population that are sort of clinging onto the notion that everything is okay, everything is awesome, nothing is going to happen in the housing market. Why? Well, here's why this housing downturn is nothing like the last one. So basically, when we have housing arguments on crash, bubble, downturn, whatever, everybody says, but it's different this time. Okay, well, here's the reasons why it's different this time according to that side of the argument. All right, it's called supply issue, so it's lack of supply, which means people pay more for properties. We have better lending standards, we have better credit scores, et cetera, et cetera. So, it's all these things, that we're going to hear from there. People, have trillions of equity, et cetera, et cetera. So it's the same rhetoric that we're hearing over and over again. So it's kind of like, certain aspects of mainstream media, and clearly, they're working for, people who are making money in real estate, of course, and want to keep the market up and want you to believe that stuff like this isn't happening. Well, you know what? This segment of journalism is becoming smaller and smaller. And the reason why, because we're seeing stuff like this going on right now. Look at this article to Fortune. The housing market is entering the most significant contraction in activity since 2006, says Freddie Mac economist. All right. And even better, this is the one we're going to talk about today. The Fed plans to reset the housing market, raising the likelihood of falling home prices. All right, so there you go. So when the actual Fed comes out and says, well, you know what? Maybe we got a problem here, and realize that the Dallas Fed on a couple of times have actually said, hey, we're kind of working into bubble territory. So now I realize that they can't actually come out and call it like 100%. They sort of float the idea that, well, we've got bubble territory and maybe there's a reset that needs to happen and X, Y, and Z, whatever, but they're not going to say we got a problem. They're going to infer, so they haven't actually called it to create chaos. But pretty much this is what they're doing. They're calling it out. So essentially, we obviously the Federal Reserve, increased, interest rates, which reflected in mortgage rates, which is causing a bit of chaos in the marketplace now. And of course, when that happened, a shift occurred. We heard very little from the Fed. They're saying that was until Chairman Jerome Powell addressed reporters on this past Wednesday, so last week. Basically, here's what he had to say. Home prices are moving up very strongly the past couple of years, but blah, blah, blah. You can read this paragraph on your own. I'll provide you the link. But in the end, he basically said, I'd say if you are a home buyer, somebody or young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. So basically, he's exactly what he's saying. He's going, at this point in time, we have to have a reset to make things affordable so pretty much everybody on the demographic spectrum can purchase a property, which does seem to make sense. So what he's saying is not actually anything, bad or indifferent. He's actually speaking the truth. But unfortunately, we are so far down the path on home price appreciation and what they've done to mismanage or misreading the housing market that it's going to cause chaos and pain to get it back to a level where everybody can participate pretty happily, equitably, whatever, in the housing market. So that's where we are today. So basically, he's got three things he pointed out. So he says home buyers, need a bit of a reset. Essentially, housing cool down are caused by rising mortgage rates, which will help push inventory up. He suggested this will help buyers. When shoppers restart their house hunt, they'll be met with a friendlier market. Higher inventory levels would give buyers more time to decide and reduce the chance they'll have to engage in a bidding war, which is true. But realize that, yeah, buyers will have more time to decide because they can't afford as much. So therefore, where things are right now, they're price of the market. They're going to have all the time in the world to decide until housing prices come back down to earth, and that's exactly what they're trying to do. If we raise interest rates so much that the buying power of our buyers is curtailed, then if you've got to sell or you need to sell or you want to sell, you're going to have to reduce your selling price to accommodate that increase in mortgage rates. It's very straightforward. So how much inventory levels have shifted over the past weeks? This is a graph from Fortune.com here. Ultimately, you can see that the darker the blue, the more inventory has hit the market. I can tell you in the county where I live, about 2 months ago, we had under 1,000, just under like 900 and change single family properties for sale. I checked this morning, we were about almost 2,200. So in the matter of a month and a half, 2 months, I don't remember the exact dates and times I was looking at this, but we pretty much doubled the for sale inventory in my county where I live in the Tampa Bay area here. So that's interesting. So we can see that stuff is coming on the market now. Number two, falling home prices. Powell seems to have suggested it's possible. Well, again, they're not going to come out and say, sell your property now, things are going to crash, things are going to bust, whatever. They're not talking about stuff like this. As a matter of fact, they won't, and they'll refuse to, and they'll just infer. So basically, as the reporter was saying here, for a moment it sounded like Powell was about to say home prices would fall. Regardless, he didn't rule it out, and that matters. Historically speaking, outside of the Great Depression, after the housing crash of the 2000s, year-over-year home price declines almost never happen. But today's circumstances could lead us into a rare period in which home prices do indeed fall. It's telling that Powell didn't close the door on the possibility of home price declines, and instead said, we are watching that quite carefully. So kind of like when Robert Shiller of the Case-Shiller, U.S. Housing Index, co-creator of that, sometimes when he is interviewed, he speaks and like these guys, they're double talk, they're kind of infer, make some suggestions, don't commit, blah, 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 because they know, and listen, I get their position. They know if they say something the wrong way or infer the wrong thought, etc., it's going to cause massive chaos. I get it. These guys are not in a good position, but in the end, it's kind of like be real. Be real to your, whatever, constituents, or be real to the public out there and tell us what's going on. Now, I think all of us can pretty much infer what's happening and kind of predict where it's going. All I'm saying is that this now, I think, has really increased or accelerated the decline in home prices because of their quick and aggressive rate increasing. The degree to which regional home prices are overvalued or undervalued, according to Moody's, well, clearly the overvalued is the green, the kind of gold is the undervalued. I don't see much gold on here. It's going to be tough for you to see, but there's very little gold shading. Obviously, we see elements of green shading, the darker, meaning, overvaluing towards 50% or greater. So you can see that pretty much, the areas that have the most population, the bigger cities, etc., that's where the overvaluing is going on, right there, the darker colors, okay? So, having said that, all right, his situation is what? Let me just move this over one more here. Basically, Powell explicitly said that he'd like to see mortgage rates fall. The central bank raised interest rates to both halt the pandemic housing boom and to rein in runaway inflation. So we got two things going on. Inflation, which is out of control, and obviously home price appreciation, which is, it kept going double digits, for the past couple of years. Once the Fed has inflation back under control, elevated mortgage rates could begin to recede. So basically, that said, home shoppers eager for mortgage rate relief might be waiting for a while. The consumer price index was 8.6%. The Fed won't let up on inflation falling until the CPI returns to 2%. So that's a long way to go. Or Thursday, the Fed made it clear that this fight could last well into 2024. So, which is pretty much on par with a lot of other economists saying if we have housing corrections or housing crashes, we're going to have 3 to 4 years of this. So we're basically looking at, 2025, 2026, when this all kind of unwinds if it plays out the way we all think it's going to play out, which, listen, it seems to be doing that right now. Okay, nothing is surprising me anymore. How can I put it? I guess I'm in this relatively calm state of mind right now, deploying, implementing, preparing for what's coming. And there's a lot of stuff going on behind the scenes. So I guess I'm satisfied of where things are at and how they're playing out. As you see, I'm not making as many videos because I'm actually doing a lot more work out there and stuff happening, picking up the pieces, getting deals, working forward, making relationships, getting stuff prepared for what's going to happen in the next little while. And I can tell you that people are inquiring way more than they used to before. All right. Hey, by the way, if you enjoy the content I put out and you're not a subscriber, if you could do me a favor, hit that subscribe button. I'd really appreciate that. And guess what? If you're a subscriber or think you're a subscriber, please do me a favor and check that out. Hit resubscribe or subscribe again, because I tend to lose more than I actually put on. I've been plateauing for the past couple of years now. So we all know what's going on behind the scenes. If you could resubscribe, that would be most appreciated. Thank you for all of your patronage and your views. Now, guys, so since I took a little break here, things are getting busier, all right? People are coming out of the woodwork, and you can see that with respect to the feet on the street. Some price corrections going on now, more inventory, stuff changing out there, a lot of interest in this pre-foreclosure, foreclosure, short sale, distressed property kind of arena. So one of the things that I do need is I need more real estate agents. Now, I'll be very clear. I'm not looking for the top performers who want to command huge commissions and have their own way and blah, blah, blah. I'm pretty low key when it comes to stuff like that. I'm no frills, no fuss, no mess, all right? I want people who are looking to make money and would like to learn how to do what I do and get into this, distressed property, pre-foreclosure, short sale gig, because we have hundreds of millions of dollars in buyers and buying power behind us. We just need to get the deals, and that's where the effort is. So if you're looking to jump ship, or if you're becoming a new real estate agent, you want to check out what's going on in my neck of the woods here, please let me know, and we'll have a good chat. And by the way, short sale program is back. I took this off the market a couple months ago because I'm building my new final product, you could say, my final training product, which is going to be all about foreclosure. So short sales will be a portion of that as well too. But based on everyone saying, we got to do this now, I got to learn now, I want to get in the game now, I'm going to bring the program back for a little bit of time just because people are inquiring. So if you missed out on it before, jump in now. Reach out to me. Let's get you on this week because it's going to go away again. And listen, I'm going to transition. Everybody who's in my programs, I will transition to the new, we'll call it, Mondo awesome program when I get it done. It's taking longer than expected, and reason being because things are going faster now than expected. So there's a lot of work on the deal end. So as I said, it's deals first, everything else comes afterwards. All right. So, but please inquire at limited time for this, best price available, and then everything goes up with the new program. That's the way it goes. Okay. And by the way, if you're in my area, I do have a real estate club. It's called My Tampa REI Club, My Tampa Real Estate Investment Club. I have meetups, and we do events, and we have trainings and stuff like that. So I've done a number of them, and if you actually go to meetup.com and go to the search on My Tampa REI Club, as far as in the group section, you'll pull this up here, and you can basically just click to join the group, and then basically whenever I have a meetup, which we'll do maybe 2 of these a month. We just did one yesterday. We actually talked about the Florida foreclosure process. I had my attorney that I work with there as well too. So it was a great event. A lot of information was exchanged. A lot of people got to meet him and talk about the process. It was very very enlightening and entertaining. And that was my 101st event, by the way. So we'll do typically at least one event a month, if not 2. I got a great location where I'm working out of right now. It's a collab. It's a community sort of collab shared environment with. It's got a great setup there. So that's what I'm doing. There's more to this, more community aspect, etc. So if you're in the area, click on that. So now you'll get the notification when we actually have events, and they're free. Show up, hang out, meet people, listen to some good information. There you go. Okay, guys, enough of the brought to you by Randy Patrick here. All right. So by the way, today, and I haven't talked about this for a while just because it's been so boring, to be quite honest with you. So we have the NAR, National Association of Realtors, existing home prices. So guess what? Here's the key highlights. Well, you know what? Home sales declined because every month now we're actually having less and less homes selling for whatever reason. So we're down 3.4% from the April month and down 8.6% from a year ago. But here's something to note. The median existing home price sales price actually exceeded $400,000 for the first time. It represents a 14.8% increase from about a year ago. So that's big news. So existing home price median broke the 400K mark. Volume is down, obviously. Unsold existing inventory, unsold inventory of existing homes rose to 1.16 million by the end of May, or the equivalent of 2.6 months at the current monthly sales pace. So we're seeing a little bit of a rise in inventory. Clearly now in June we'll see more of that. So again, we're all hoping that the market tends to balance, or at least works towards a little bit of a balance as time goes on. But just to highlight the graphs here, so seasonally, home sales, a seasonally adjusted annual rate, 5.4 million. What that basically means is if you take the amount of sales that were done this month and you annualize it, we'd be down to 5.4 million sales for the year, which certainly is about over a million from the peak, which was as everything came out of the pandemic back in 2021. You can see that was 6.65. So a big decrease over the past little while for many reasons. Obviously, the median existing price, 407K, the new high watermark. Existing home sales median price. So we're pretty much seeing, we're off from the 20+% year over year changes. We're into the teens, mid-teens, 15s, 14s, etc., which tends to be stabilizing. Existing home sales percent change year over year. So each month now, compared to the same month the previous year, there's less home sales going on. You can see that's been decreasing, 1% back in August. We had 6% in April, 8.6% in May. So you can see that there's less homes being sold. Surely that's an inventory thing, but also now it becomes a price point thing. People are becoming, tired of the situation with respect to housing. Now, Realtor Confidence Index survey here. This bar graph sort of shows how things are working on the field there. First-time home buyers, well, they dropped from 31 to 27% of all sales. Sales to investors dropped from 17% to 16%. Cash sales jumped up a couple points to 25%. Distressed sales went from a meager 1% to 0. And days on the market down from 17 days in the market to contract to 16 days. But I want to highlight this right here. So distressed sales were 1% or barely 1%, under 1%. Now they're not even registering on the marketplace, which is kind of hilarious. So what does this tell you? This means distressed sales in NAR's world are short sales on the MLS and REOs, which stands for real estate owned, which are foreclosed homes that are listed by the lenders on the MLS. So what this basically says is that the amount of sales on a monthly basis of short sales and REOs is virtually nil. All right, there's stuff going on, but listen, when I told you that, I pulled my information today and I said, well, how many single family homes are actively for sale in my county? I got about 2,200. Well, if I click a button and go, how many of those are short sales? Well, I'm going to get 4. All right, how many of those are REOs? I might get 8. So you can see that the distressed property element of the overall sales market across the board and even regionally or locally amounts to virtually nothing. It's less than 1% or point something of a percent, 0.0 something percent. So it's low. Makes no difference. Any sales, do not contribute to anything whatsoever. There's no statistical anomaly here, or this is the anomaly, I guess. So what does that tell us? That tells us that real estate agents are not going after this pre-foreclosure market, because if they were, it would be listed and we'd see more activity, we'd see it reflected there. It also tells us that real estate investors aren't going after this market for the same reason. If they were going after it, would be listed and there'd be more activity going on. So that's why when I talk about stressed properties, pre-foreclosures, foreclosures and short sales, the whole sort of range of what's going on, when you see virtually no sales, so the distressed property market is making zero impact on volume and zero impact on median price locally, regionally, and nationally. That means there is a huge opportunity because all this shadow inventory is sitting there. So this should be the biggest takeaway of the video, is that, according to NAR, it's immaterial. It doesn't even exist out there. Yet we know, and I can show you, and you can, again, go to, gethousingdata.com or any other data service that you have access to, whatever, and you can start pulling off the pre-foreclosures and stuff and go, well, they're there. Well, they're there because they're sitting there going through the motions or going through their process, but they're not coming to the surface where they're being engaged by buyers, real estate agents, whatever. So that, everybody, is the reason why I'm doing what I'm doing and why we need to get a head start and go forward with this. So this is hugely telling. It's almost comical from my perspective here. All right. Existing home sales by region, obviously the South's big time, Midwest, West, Northeast tend to have pretty much the same distribution. This is interesting. So price range. So clearly we're seeing every month we see a little bit more uptick in the greater than 500K range, greater than 750K range, greater than a million K range, right? Obviously 0 to 100K sales point 4%. So I don't know where you can find those properties. Some little locations in maybe Alabama and things like that still exist. The 100 to 250K, which typically would, to me, be affordable housing, workforce housing, is 20%. 250 to 500K seems to be the sweet spot. That's where most sales are at, 42%. 500 to 750K, 19%. 750 to a mil, 7%. And 1 million above, 8%. So again, that sort of 750 and above is counting for 15% of the marketplace, which, when you take a look at, so those segments, the higher price segments, are increasing in their contribution to the overall, numbers. That's why, we can see that, hey, year over year percent sales change, 0 to 100, 200 to 250, 250 to 500, down, down, down. What's up, and what's up significantly, 20 plus percent, 500, 750, 1 million. So that's the segment that's bringing up the median price point, that's accounting for a lot more sales, whereas the sub 500 level is actually losing sales because of the lack of inventory, etc. There you go. Or people are pricing too high and buyers aren't going to go for that. So just keep that in mind. Now you want to know about the distressed housing market. Like I mentioned, what am I looking for? I'm looking for new agents. I'm looking for people who want to jump on the short sale stuff now. I'm looking for people to start to attend and come out and talk. And listen, we don't all just talk about short sales and things like that. There's a lot of things that go on at these meetings that we have. We're working on selling real estate as an NFT, in the sort of crypto blockchain world. We've got tons of things that we talk about, from different speakers, this and that. So it's very informative, very interesting. We want to be cutting edge in a lot of stuff that we're doing in the future. So if you're in the neck of the woods, check me out at the My Tampa REI Club. Come to one of our meetings. Want to reach out to me? Hit me up at randy@luxuryshortsales.com. And of course, once again, I thank everybody for your views, likes, and comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. I look forward to speaking with you in a couple of days.